Listen up, beautiful people, because something big just went down in the crypto market. This is one of those moments where, if you've been watching closely, you saw the storm clouds building. I've been warning about this the past few days, and today, the hammer dropped. Over $1 billion was wiped out in crypto liquidations in one massive swing. Now, yes, the charts are painted red right now, but here's what most people forget in times like this. Over the past week, the market has still been up a significant amount. So before you panic sell, let's break down exactly why this happened, what triggered the sell-off, what we can learn from it, what whales are doing right now, and most importantly, how we can actually take advantage of this situation. And as always, whether it's a green day, red day, yellow day, or a hold-on-tight roller coaster day, smash that like button to send those good vibes out into the market. As I'm recording this, XRP is sitting at $3.50, down about 6.6% on the day. And this comes right after XRP broke its trend, which, if you caught last night's video, I told you felt off. Bitcoin had just hit a new all-time high last night. Ethereum was flirting with its own ATH. The mood on crypto Twitter was electric. But here's the thing. I didn't feel like we were ready for a real pump. Something in the charts, the order books, and the volume just wasn't lining up. Why? Leverage. Too much of it. The kind of leverage that doesn't just boost price, it sets up a domino effect when things turn. I've been staring at these charts, day in, day out, for years now. You start to develop a sixth sense for when the market's overextended and manipulation is in play. This morning's sell-off wasn't just random. The immediate trigger was bad PPI data. The producer price index came in way hotter than expected. For July, PPI inflation rose to 3.3% versus the 2.5% analysts were expecting. That's not a small miss, that's 0.8% higher than forecasts. Core PPI, which strips out food and energy, was also 0.8 above expectations. And here's the kicker. PPI inflation is now the hottest since March 2022. Why does that matter? Because just yesterday, the market was pricing in almost a 100% chance that the Fed would cut interest rates next month. After today's PPI print, that dropped to 90% with a 10% chance they keep rates unchanged. That data drop spooked the market, or more specifically, it spooked the algos. XRP fell from around 370 to 3 flat in 5 minutes. That's a cascading sell-off, where liquidations pile on top of liquidations, wiping out heavily leveraged longs like dominoes. And it wasn't just XRP. Bitcoin dumped. Ethereum dumped. Solana, meme coins, even Cardano, they all took the same hit in the same 5-minute window. This was systemic, not asset-specific. In the last 24 hours alone, over $1 billion was liquidated. In just the past 12 hours, Ethereum saw 233 million in long positions wiped out. Bitcoin lost 156 million in longs. XRP had 53 million in longs liquidated, and Solana 47 million. Everything got hit. Even safe plays like Cardano, which was up 10% earlier this week, is now flat. Here's something fascinating. The S&P 500? Down just 0.5%. The VIX Wall Street's Fear Index up only 4%. That's nothing compared to the panic in crypto. If you zoom in on the charts, you'll see the stock market reacted to the PPI news, but nowhere near as violently. In fact, Microsoft was up today. Amazon was up. Nvidia was flat. Tesla was down a bit. But this was not a broad market collapse. This tells us the crypto crash wasn't just about inflation fears, it was about high leverage getting flushed out. And while all this chaos was happening, the whales were not sitting still. In fact, blockchain data shows large XRP addresses, we're talking wallets, holding over 10 million XRP actually increased their positions during the dump. While retail traders were panicked selling into the drop, the big money was scooping up discounted tokens. This is classic whale behavior. Let retail get shaken out. Let leverage get destroyed. Then quietly buy when the price looks scary. And it's not just XRP. On-chain data shows similar accumulation patterns in Bitcoin and Ethereum, where addresses holding over 1,000 BTC or 10,000 ETH made net inflows during the sell-off. When you see that kind of divergence between what the whales are doing and what the headlines are screaming, it's worth paying attention. Look, I'm not saying don't use leverage. Used correctly, leverage can make you a lot of money. But overuse it, and it can destroy your portfolio in minutes, as we saw today. If you were short today, you likely made a killing. If you were long with high leverage, you probably got wrecked. That's why I always say, practice on a demo account first. Understand the risks. Never go all in with leverage unless you're prepared to lose it. And remember, even the best exchanges have gone under before. Read the user agreements. Understand the rules. So, is this the end of the bull run? No, not even close. In the medium to long term, I'm talking 3 to 6 months, nothing fundamental has changed from where we were a week ago. When CPI came in better than expected, the market pumped. When PPI came in hot, the market dumped. That's just traders reacting to macro headlines. But the underlying trend, institutional money flowing into crypto, hasn't stopped. President Trump's administration is still pushing forward with pro-crypto policy. We're seeing money from traditional finance, not just retail, come into this space. That's a totally different dynamic from the last cycle, when it was mostly retail traders and a few fringe funds driving the action. If you wanted XRP around the $3 range, you just got your chance. Could it dip lower? Maybe. Could it bounce from here? Absolutely. Nobody knows for sure. Not me, not the Fed, not the algorithms. But what I do know is that every bull market has these violent shakeouts. They flush out the leverage, they scare out the weak hands, and they give patient traders opportunities. Bitcoin, Ethereum, and XRP all moved in near perfect sync during the crash. That tells you this was less about fundamentals and more about market mechanics. And right now, XRP is holding slightly above its panic low, while Bitcoin and Ethereum are back to pre-dump levels. So here's the big takeaway. This wasn't the apocalypse. It was a reset. A reminder that leverage cuts both ways, and the market doesn't move in straight lines. The stock market didn't freak out. The macro trend hasn't broken, and the long-term bull case for XRP, Bitcoin, Ethereum, and crypto as a whole remains intact. But if you're trading short-term, keep your eyes open. Watch the macro data, manage your risk, and never forget that in this game, the real winners are the ones still standing when the dust settles. As always, this is not financial advice. Do your own research before making any investment decisions. I'll never DM you asking you to send me money or sign up for something sketchy. Those are scammers, so be careful. If you haven't subscribed yet and you keep coming back to Crypto Labs News for updates, now's the time to hit that subscribe button and ring the bell so you don't miss the next big market move. Drop a comment with XRPone123 or Aid for Infinity and Beyond if you're part of the family. And smash that like button if you're riding out this storm with us. Thanks for watching, and like I always say, let's make a lot of money.